We'll be discussing money management in this video lesson. As a trader, it is essential to formulate some sort of plan. The money management plan you will develop for yourself will no doubt be tailored to fit your personality. Consequently, there will be as many plans for individual success as there are individuals. So what is your plan? Where should you start? Here's an example of a solid, conservative plan that a young trader might decide to adopt. Trade a maximum of 600 shares per trade with a 5-cent stop loss should the trade reverse. If up over 25 cents, seek to scale out of half the position. With the remaining shares, adjust the stop loss to the entry point and hold the position. Adjust the position again if up over 50 cents and place a stop somewhere that seems fit. If the account is down $200 by 11 a.m., then trade half the share size the remainder of the day, or until the account is back to even. Stop trading completely if down $400. However, if the trading account is up quickly, let's say $500 for example, trade half the share size if you give back up to 20%. Sounds simple enough. So what's the problem? Well, stocks gap, liquidity can dry up, and exits can disappear. The market is dynamic and at times violent. What is important to note is that although your plan may at times be forced to go out the window, having a plan to lean on is in itself indispensable. Without it, you're just guessing. The money management plan I described earlier is a good one. However, it may not be suitable for a developed, successful trader who's become a student of market dynamics. You will find that as your trading skill set evolves, your money management plan will evolve with it. The most important thing is that you implement a money management plan that you feel comfortable with and can stick to, because a plan is not much of a plan if you rarely follow it. Basically, a well thought out plan is useless if not implemented properly. The only way to succeed as a trader over the long haul is to develop consistency by following your own rules. Young traders will often deviate from their own money management plans with horrific results. Developing good habits that will make money consistently is the foundation upon which your ultimate success will be built. Don't fall into the trap about thinking the market. If the money management plan you have developed is solid and the motivation behind your entry and exit decisions are sound, then your career path will be defined by your discipline. Keep in mind, when trading, anyone can learn how to make money, but not everyone can learn how not to lose it. Now, a way in which a trader can practice sound money management skills is by paper trading, especially when new and unfamiliar with a particular strategy or market. Paper trading is simply trading without putting any money at risk. In other words, on paper. When paper trading, a trader should try to simulate real-life trading as much as possible. This will help you determine how you will perform when you begin trading with real money. For this reason, you do not want to take any unnecessary risk in paper trading that you would not take in real life. Unfortunately, many people fail to do this. It is common to see people reckless and overconfident when paper trading stocks, often being far too speculative rather than being careful and disciplined. They wind up doing anything and everything possible to create a profit in their paper trading account, regardless of how unrealistic it may be. The reason why so many people fall into this trap is that there is no true recourse or penalty when paper trading. It's simply paper. As a result, people gain a false sense of hope that paper trading is easy and that they have developed a successful skill set. However, once they begin trading with real money, they quickly come to find that the wild things that they were doing is not possible and that they are actually destroying their capital. Therefore, use the time you spend paper trading to practice the fundamentals and try to abide by a set of rules that you create. That way, when you begin to trade with real money, you're not caught unprepared. Now, there are many websites out there that allow you to follow a mock portfolio of stocks. However, doing this is something completely different. It is not the way paper trading should be done. True paper trading should be carried out with the same trading platform and system that you plan on using when you start trading with real money. Since the typical portfolio tracking websites do not allow you to see everything that is going on in the market when you buy and sell your stocks, you become shielded from reality. You become unaware of the amount of risk you took compared to the amount of gain you received, as you do not get to see the stock's fluctuation in price. Thus, you might be holding onto your stocks longer than you should and letting your losses accumulate beyond what you would have allowed in reality. Therefore, it is not replicating actual trading at all. When you place an order, you should know almost exactly what price you would have obtained in the open market and just how much risk you are really taking. This kind of information can only be accomplished using real-time data provided by a real-time trading simulator. So make sure when you start paper trading that you use the proper trading tools. And the last thing we should address is the unfortunate bias new traders have towards buying a stock rather than selling it short. New traders look to buy a stock low and sell it high, even when the market is telling them that they should be selling it short. Use this time when paper trading to force yourself to find just as many stocks to sell short as you do long. This will help you lose any emotional preference you may have to buying stocks, and should help you realize that a trader can make money whether a stock rises or falls. From this, we can see why it is so important to begin as a trader by paper trading correctly. Use it as a way to practice and implement a set of rules in which to follow, so that when you begin trading with actual money, you're prepared and ready to effectively trade the markets.